right, welcome to the closing beat, everybody. Happy Monday. How's it going out there? Hope all is good with you guys. Everything has been good. Welcome back. We're trying to get this thing working right. I appreciate all your patience and everything through this. This is the Closing Beats, quick stock market update show that we do, and we'll make it quick for you to go through everything. We cover the stock markets, all the good, the bad, and the ugly for the day. We also have a research site. Hope you'll check out. I don't know if this is interesting to you or not, but if you go over to jazzwealth.com/research, you can actually see kind of the stuff that we're going to be sharing there. A lot of stuff we share on the show, but we're going to expand on that. And then if you'd like, you can leave your email down here at the bottom, and we will email you when it's available. It should be up here shortly, hoping. Anyways, we'll go back over to that maybe a little bit later and talk about that as we go. Hey, let's talk about the stock markets here today. NASDAQ, new record close. I'm just going to pop right over to the charts, actually. We're going to dive into this good stuff here, and hopefully this works. This is going to do the trick. Yay! All right, let's talk about it here. So today, you got the NASDAQ looking strong. New record highs, actually, for the NASDAQ. I want to expand on that here in just a second. Really, the excitement for the day was going to be Apple. Apple hitting new 52-week highs. There is their Worldwide Developer Conference going on right now, and typically the stock actually sells off going during the Worldwide Developer Conference there. And so today is actually a bit of a start of maybe a contrarian move for Apple. We'll cover some of that. They decided they're going to be ditching the Intel processors, going with their own processors, lots of other great stuff in there that they'll be announcing going forward as well. The average performance for the stock during the conference tends to be negative 1.61%. Going back through every one of them since they first started, it's only positive 29% of the time. The last 2 years, we bucked the trend just a little bit. Last year, it was up 8%, and the year before that, just about 1%. Typically, the way this goes is the stock runs up into the conference and fades away after it, looking out 1 week, 1 month, etc. So if you look 3 months before, 1 month before, 1 week before, during, 1 week out, 1 month out, and 3 months out, typically it's a run up and then sell into the news. They call it buy into the rumor, sell into the news type action there. So that's what's going on. That helped the NASDAQ today. Also, you can't ignore Microsoft there, 3% gain on the day. Microsoft new 52-week highs as well. Not really any news there. FANG stocks did well today. Facebook was kind of the underperformer, but you had Amazon higher, almost hitting new 52-week highs. Netflix in the mix as well, about 3% moving along nicely, new 52-week highs there, and Alphabet as well. One thing I want to point out when we look at the NASDAQ, we talked about this last week. We talked about tech being the biggest weighting in the S&P by far. If I go over here, this is the chart that I actually shared with you, where we showed the S&P breakdown by sector in terms of their weighting and showed how technology was the biggest. You could look at the closing beat on June 18th if you want to check that out, kind of our in-depth discussion here. What I wanted to point out was we were at 26.7%. Just a few days later, we're now at 27.2%. So technology taking over even more. Add up all of the bottom 6 performers there, put them together, and the technology is still the strongest out of all of them there. So just kind of impressive there, what's going on. The Dow and the S&P were the weakest on the group today. Still had good days, just kind of the weakest of the group. The Dow under the 200-day moving average. S&P 500 coming up shortly, bounced off the 200-day moving average. Did pretty good there. You got some negative news out there. Case counts rising. I thought I'd share them with you here today. Hospitalizations. Here is in percentage terms, the growth of the U.S. Virus hospitalizations across the U.S. It's updated daily. One thing I wanted to point out is, unfortunately, Florida is now comfortably, well, we got to go here to the 3 month. There we go. Florida and Arizona now comfortably higher than the U.S. average if you're looking overall. Texas and California also are in the mix, and a couple other states, but Florida and Arizona getting the big bulk of the news. I don't know. Case counts across the board there have sort of flatlined, even though the media is saying they're still going higher. Sort of flatlined over the last couple days. However, not looking good in terms of the number of new hospitalizations there. Because of that, if we were to go back to the charts, if I were to take the S&P 500 today and sort from the biggest gainers to the biggest losers percentage-wise, at the bottom of the list, you're going to see those virus-sensitive names like American Airlines pulling back again. That's your worst performer on the group. Norwegian Cruise Lines pulling back. Royal Caribbean, of course, in the mix. Wynn Resorts. Nice little pullbacks here in the last couple days. Carnival Cruise and others that are directly affected, obviously, by the virus there. Those were the weakest ones out of the S&P here today. And just found that kind of interesting. A lot of the stocks that have been weathering the virus storm were at the top of the list overall. And basically, that's what you have in terms of the latest there from the major indices. We'll go on over to talk about the videos that we have this week in our FinTip series. We have today, we talked about which REIT ETF to choose because a lot of people were liking that dividend investing. Today we focused on the ETFs and kind of the performance and everything, how those go. We didn't just keep it kind of basic. You guys know, I mean, I like to go a little bit crazy here. So what we did is we actually broke it down by dividend yield. We talked about a handful of them. We actually talked about our REIT fund here at Jazz as well. Then we broke down in the terms of the volatility for the performance. Kind of a geeky video if you're interested in that sort of thing. So maybe you'll check that one out. And then also Wednesday and Friday this week, if you're one of the active traders or you're out there trading in the markets, I know a lot of you are, we're going over when to sell stocks, particularly how to track your stats, what sort of stats you need. I think you'll really like Wednesday and Friday's videos. How to enter a stock position, have your risk adjusted ahead of time, targets predicted and everything. Talking about win-loss ratios and batting averages and things. A little geeky for you guys for the rest of the week. That comes out Wednesday and Friday. And then our Wine and Wealth, this class, I think we're going to really highlight that this is your last chance to have lower taxes in retirement. Sadly, I think a lot of you understand that tax rates are going higher. And so we're going to do a little strategy session there with our customers. And we'll go through that. Let's go to the sector breakdown here and take a look at a few things going on across the sectors. And I want to share something maybe a little more geeky here today. You got tech. Tech higher on the day was the leading sector of the day. A lot of that's going to be because of Apple and Microsoft. Over 75% of the gains today in the XLK were due to those two stocks individually. Intel did get the boot from Apple, but the stock still held in there. Actually, a nice little pattern there sitting above the 200-day moving average. But that one was in the news for that sector. Energy. If you look at energy overall, about a 0.5% gain on the day. It was back at the bottom in terms of one of the worst performers over in general. It's not that it's weak or that there's anything wrong with it. It's that it's entering that chop zone. I've been talking about this for about a week and a half now. The pullback into a chop zone, you want to see it bounce right away, get out of the way and move back into an uptrend. You're just not seeing that right now. So it's getting a little bit choppy there. On the downside, a few names you can't really blame. Marathon Oil down 1.5% on the day. That's in the chop zone there. If you own that one, it's chopping around. Devon Energy, of course, doing the same. Very popular stock there in the energy sector. Valero chopping around, although still above the 50-day moving average. And then on the upside, even though you had stronger names like Williams, it's still in a chop zone there. So just kind of choppy, messy. Apache's another great name. Hess would be another one I saw earlier. Overall, nice recovery, nice things going on, but still just chopping around. Energy, REITs down just a little bit on the day, although closing well off of their lows. If you look at things like Digital Realty, that was the biggest contributor to the upside, but unfortunately it was offset by names like Crown Castle, down 2.4% on the day. American Towers did actually recover most of it. That's one of the stronger ones in the group there. Still down about 0.5%. And then Equinix, there you go. Equinix did weigh on some of the strength in that area as well. Moving outside the sectors a little bit, you got gold miners, a very strong pop above this downtrend here. You can see that it was just, nice calm trending pullback today. Breaks above that in general. Did a little scanning around there. Newmont typically is the darling. However, it looks as though this Anglo Ashanti, I haven't looked at this in years, to be honest with you, in particular to the chart pattern. Looks like this one's becoming the sort of darling of the favor. Money moving out of Newmont, moving into Anglo Gold Ashanti, which I've never been able to say the name, by the way. All right, crude oil just a little bit higher on the day, 2.2% gain on the day to 40.60 a barrel. Oil prices moving just a little bit higher. We'll take a look at gold while we're here, 0.64%. That breakout starting to take shape. Been talking about this for a couple weeks. This basing pattern here, nice and quiet. Up 13 bucks today, 17.66 because the dollar took a little bit of a break. If you look at the dollar, it's been bouncing off these lows. It's held gold back a little bit. Got a little pullback in the dollar today. That helped gold sort of took the top off of gold just a little bit, if that's something for you there. Here's your kind of geeky lesson of the day. All right, we've got an issue here. We've got just a little bit of an issue, and I'm going to go right over to the screen so you can see. The stock market, everybody's going, is it going to go higher? Is it going to go lower? Well, there's actually a little bit of positioning now that believes the stock market's going to go sideways. It's actually kind of common when a stock market has a big drop, a big rally, it could just go sideways. And we did a little research to see if that was something that was happening. Now, here's what you do. If the stock market is moving sideways, kind of like it is right now, what historically happens is the underperforming sectors play catch up. So the best performing sectors start to move sideways. The underperforming sectors start to play catch up. So what we did is we put a little scan together to show you year to date, what are the worst performing sectors and the best performing sectors. Put them in order for you. We know tech is strong and everything. The problem is you don't want to look. If you ever hear this again in the future, that you expect the stock markets to go sideways and for the underperforming sectors to catch up, you want to pick the most recent low. Statistically, your odds are better if you pick the most recent low and actually plot the performance from there. So what we did is we actually went from the virus low, because that's an easy one this time. We all know it's March 23rd. And so we plotted the performance of each individual sector in the S&P 500 from the virus lows. This is where you want to look if you're hinting or hunting for stocks in these underperforming areas. We know energy's done well, by far the best. We know technology's done well. We talk about it almost every day. Materials, not such an exciting industry, but we've talked about that. Consumer discretionary as well, as people are fine just going out and spending money. Okay. One thing I want to point out, healthcare. So the second time I've noticed this one. Healthcare, remember, most of the gains, this 35%, I think 32%, I put it on the chart. Yeah, 32% came initially. In the first 30 days, it bounced off the virus lows. Healthcare was your stronger area. So that one sticks out. It's been an underperformer ever since then. You expect that to play catch up if the markets move sideways. Utilities and consumer staples, and we know financials didn't kick in till the latter part of that rally. What's interesting here is if the stock market pulls back, where do people go? Consumer staples, the yield of utilities, healthcare, they're going to go to momentum and the relative strength areas there. And so this could be a reason that you might want to take a look at some of these areas here if the markets go sideways. And I found it fascinating. I studied back the last 5 days just to see, are any of these waking up? Healthcare is your best performing sector overall in the last 5 days. You know that? So it's already starting to attract those investors that say, oh boy, stock market's going sideways. I better be ready for that mood, that sort of approach, that strategy there. If you look at consumer staples, which is the worst performing area there, it came in 4th place over the last 5 days. And then communication services, which is kind of here at the bottom as well, was in 3rd place with a gain of 2.62%. It makes you wonder, is people starting to already participate in that? That's one of those normal things that I wanted to kind of teach you. You know, like the sell in May and go away, all that great stuff. This is similar, right? So when the stock market bounces significantly off a low and you think it, or it starts to go sideways, you look for the underperforming sectors, go into those sectors, find the individual stocks, or if you like, you just go to ETFs and play along with that game if that's something you're interested in. All right, technical breakdown. Let's go over to it. Here we go. Everything is so far so good. 12 new highs on the day. Adobe is the beast, right? New highs there, 2.5%, just getting a little extended now. Something you may want to pay attention to if you own it. I don't know. It's a good run. Put some money in your pocket, maybe. NVIDIA, 3% as that hit new 52-week highs as well. Already mentioned Netflix there, breaking out to new highs. Everything's good there. Electronic arts would probably be one of the focus areas, losing a little bit of steam. Mentioned that on Friday as well. Electronic arts and ATVI hit new highs, but it's having trouble. Everybody's looking over here. They're not necessarily looking over here anymore. So maybe those two are about due for a pullback. No 52-week lows. That's now 6 weeks going on here. So we'll take a look at a few stocks that may be interesting to you. ConAgra, still working on that slight little breakout there. Whole Logic getting the breakout we talked about on last couple days, but Friday it started to wake up. Got a little bit more here today. So that's looking pretty good. Volume is consistent. That's a good sign if you're thinking that that's still going to break out. Advanced Auto Parts. I just thought today's reversal was nice. You had a pretty nasty day on Friday. It stayed above the 200-day moving average. Today it recovers all of it and then some on above average volume. I thought maybe that stands out as something building a little momentum there and maybe to look at. C.H. Robinson's transport company, it is pulled back to the 50-day, pulled back to the 200-day, and today you saw investors take the shot. See that bottoming tail there? You see people say, that's enough. That's support for me. I'm interested in that, and it bounced off of its lows. If you're not familiar with candlesticks and you're one of our customers, go into the dojo. There are 3 different classes on candlesticks, what they mean, what they're telling you, both individually and together. So that one sticks out. And then this Cabot Oil, it's a bit of a counter trend play, but I like that it's pulling back. You got a discount here in the short term, some support not only from the 200-day moving average, which is the red line, but also from the pullback area here, this little 50% retracement. Some people like to look at those kind of things there. Okay, that's what I got for that. Let's look at some stocks in the news here today. You may be interested to go to space. If you're interested in going to space, Virgin Galactic signed a deal with NASA to start sending people to the International Space Station. They got to do something to get in the news because, you know, old SpaceX over there is stealing their thunder. So that stock was higher. Luckin Coffee down 16% on the day. The banks have won approval to liquidate the chairman's shares, millions of shares, and get rid of them. So stock was down on the day. American Airlines, we talked about that, pulling back today. They're going to issue a total of $3.5 billion in debt. They're going to sell $750 million in common stock. So they're going to be diluting you guys that are participating in there, if that's something you're paying attention to. The Gap was the best performing stock in the S&P 500 today, 8.2% gain. They got a double upgrade at Wells Fargo. In other words, what that means is they essentially had a sell rating. They called it underperform, meaning they wanted it was even worse than a sell rating. And they upgraded it from essentially a sell to a buy. So they didn't even go to the middle ground, which is neutral. They basically said that Athleta, I don't know how you say it, I don't buy the stuff, is one of the most underappreciated high margin products that they have. And they think that that's one of the reasons this stock and company will perform well there. FedEx is finally agreeing to take off $350 million in losses from buying Xerox way back in the day. That was like, man, I was in college when they did that. FedEx Kinko's thing. I used to go there all the time. Okay. You've got Host Hotels. They're cutting their dividend, I believe temporarily. They're, cutting it. No dividend there. Stock pulled back just a little bit on the day. And lastly, we'll go to Tyson. They are not going to be importing chicken from a Tyson plant because China is not going to be importing them. So, maybe that's sort of comments waking back up there. Anyways, other stocks here, you got Seagate Technologies. It was a little bit lower today. They're paying out 65 cents in dividends. And that's really it as far as dividends go. I don't know if anybody has Cabot here, this microelectronics, not the oil company, but they're paying out 44 cents. Today, you got DocuSign taking its place in the NASDAQ 100, replacing United Airlines. I don't know the weighting of this one just yet, but DocuSign taking the place there. And you have three adjustments in the S&P. Harley-Davidson, Nordstrom, and Alliance is going to be, well, they're already gone. No, Alliance is moving out as well, getting replaced. They're going to the S&P 400 thanks to their recent performance there. I'll take a chance and try to answer some of your questions. It's been a while. Missed you guys. We'll see what we got here. Oh, look, I can see the questions. Everything looks good there. I like it. Perfect. Not going to space unless you can hunt some aliens. I just want to see them. I don't know. Let me see them first. I don't know if we need to hunt them. Give it time. I love it, man. That's cool. Yeah, seems to work good today. No error messages from YouTube. Voice, everything seems to be caught up. I'm digging it, man. That is pretty cool. I love it. I love it. I love it. All right, I will wrap it up there. I wanted to keep this one a little bit short anyways, I wanted to get a win, right? We got a win. It's working. You did it. You guys seem good today. I love it. I'll wrap it up there. I appreciate you guys paying attention, following along with me here today, and enjoy the rest of your day. Yeah.